Hi and Assalamualaikum. My name is Fatin Azzahra binti MUHAIYEDDIN, and we would like to present our company analysis, Supermax Corperation Berhad. Before we go far, I would like to introduce my other group members.
Hi, I'm HUSNUL KHATIMAH ALIA binti AZMI.
Assalamualaikum, my name is ATIQAH binti KHAIRUDDIN.
I am NURUL IZZATI binti ROSLAINI.
Hi, my name is ATHIRAH.
So the overall introduction Supermax Corperation Berhad is a leading multinational manufacturer, distribution and marketer of high-quality medical products such as medical glove and contact lens. Its founders began trading in the sales of latex glove and finally entered the manufacture of the latex glove in 1989. Currently, the Supermax Group has 12 factories making different forms of nitrate latex and natural rubber gloves that are shipped to more than 165 countries across the world. The company disperses its gloves through 8 warehouses set up across the world and in cooperation with a large network of over 1,200 distributors worldwide. In 1989, they began their first manufacturing plant with a small team of dedicated staff. As for the top 4 Supermax Corperation Berhad competitors are Top Glove Corperation Berhad, Harta Legal Holding Berhad, Kosan Rubber Industry Berhad, and Comfort Glove Berhad. So, the Top Glove Corperation Berhad was the biggest competitors for Supermax Corperation Berhad. So the next introduction is fundamental analysis is among the two primary market, always approaches, whereas the technical analysis are the second. Although technical trader derive all the information, they will need trade on the chart. Fundamental trader analyze factor beyond the price of changes of the asset. Based on the property trader, the method that investor may use for their analysis differ. Traders who aim to establish a short-term approach to entry and exiting trades may be best suited for the technical analysis. For the next point is analysis of balance sheet and income statement. Statement of financial position as at 13 June 2020. All the companies that have been repaid and sum of 1,653,849,084 liability can be split into non-existing liability of 146,863,671 and the current liability of 1,406,985,413. It revolves the investor and analysis whether a business has ample liquid asset on its balance sheet to reach or pay off its current debt and other payable. Furthermore, statement of profit or loss for financial year ended 30 June 2020 based on the table 2 billion mark branch annual sales to a historic 2.13 billion versus 1.54 billion in financial year 2019. Supermax is expecting to double its annual profit to 1.05 billion in financial year 2021. Supermax is seen as a glove maker as a recipient of higher glove demand caused by a pandemic of COVID-19, from the current 24 billion unit per year to 27.4 billion unit by 2020 by 44.1 billion unit per year by 2024. The company will change our natural rubber glove and neutral glove based on the consumer demand. Full year sales rise from 1.64 billion by 30% to 2.13 billion. The company previously stated that the higher profit were primarily driven by the exponential growth in the demand for the medical glove and the other personal protective equipment and higher average sales price. For the next point is ratio and horizontal. Liquidity ratio, it shows that the company is in a poor liquidity level compared to industry average. The company unable to meet its short-term obligation. So for the activity ratio, it shows that the company is in a poor activity compared to the industry average. The company unable to manage its assets effectively and efficiently. So for the leverage ratio, it shows that the company is in a good leverage compared to industry average. The company able to manage its debt level and interest payment. For the profitability ratio, it shows that the return on asset is a good profitability while the return on asset in a good profitability while return in equity is a poor profitability compared to industry average. Return on asset able to generate their sale while return on equity not able to generate from their shareholder. So for the market ratio, it showed that the company is in a good market ratio in 2020 compared to previous year. The company able to evaluate the current share price of the publicly held company's stock.
And now, we will continue with the vertical analysis. For the liquidity ratio, the current ratio shows the Supermax ability to pay is RM1.27, while top glove current ratio is higher, which RM2.01. For the quick ratio, Supermax has a lower ratio, which is RM6, while the top glove ratio is RM74 for RM of its short-term liability. This company net working capital is 406,738,754, while its competitor is 2,155,129,000. This indicates Top Glove has the number of existing assets financed with long-term financing. Next, for the activity ratio, show the inventory turnover and the total assets turnover shows the Top Glove is better in the effectiveness in its inventory management and managed to generate for every RM investment in its overall assets. However, this company fixed turnover is slightly different from the Top Glove, which indicates that the company managed to generate RM65 for RM investment in its fixed asset. Lastly, the company average collection period takes 58 days per year to collect its account receivable, while Top Glove only take 40 days. Moreover, this company leverage ratio shows the debt ratio was at 51.61%, while the debt equity ratio shows that this company is 9.47 times higher than Top Glove, which only at 6.18 times. Then for the profitability ratio, both gross profit margin and net profit margin shows that the Supermax is better than Top Glove. The company gross profit margin was 52.06%, meanwhile, net profit margin indicates the Supermax can generate net earnings for shareholders of RM25.09 for each ringgit of sales. Meanwhile, as for the operating profit margin, return on asset and equity shows that Top Glove is better than Supermax, which this company only receives 0.03% taxes for each ringgit of the sales, while for the ROA and ROE are 1.64% and 3.28% respectively. Lastly, the company's competitors' market ratio shows the dividend payout ratio and earnings per share is higher than the Supermax too. Next, price to book value for Supermax is lower than Top Glove company, which Top Glove selling its stock more than its book value. As for dividend per share, Top Glove has a higher dividend per share than Supermax, which 57 cents dividend each share in 2020. Meanwhile, book value per share for Supermax is RM4.56, representing total assets and total liabilities. The price-earnings ratio that Supermax only has a 44.33 price-earning ratio, which indicates that the amount of market is priced into its stock. Top Glove is 6.28, which Supermax has a better price-earning ratio than a Top Glove. Lastly, the dividend yield shows that Top Glove has a higher dividend yield than Supermax, which is 864% and 0.94% respectively. And next, we continue with the risk and return. Based on the table, for the expected return, Top Glove has the highest expected return of 0.3306%, followed by KLCI with negative 0.0137%, and lastly our Supermax with negative 0.5901%. Next, the variance show Top Glove has the highest variance of 190.2539, followed by Supermax with 109.0639. Next, the lowest variance is KLCI with 1.5634. Based on the table, Top Glove has the highest standard deviation with 13.7933, followed by Supermax with 10.4434, and the lowest KLCI is 1.2303. As lastly, for the coefficient of variation, KLCI has the highest. The coefficient variation of 0.7998, followed by Supermax with 0.0957 and Top Glove with 0.0725. And now here is the regression analysis between company and competitor, regression analysis between company and KLCI, and regression analysis between competitor and KLCI. When we compare the expected return of Supermax, which is 285.5593%, is more significant than 4.28%, which means that this company is worth investing. Then from the Top Glove expected return, when we compare, 171.2754 is more prominent than 4.01%, which means that this company is worth investing. Next is the graph for the security market line. The graph shows that the Supermax and Top Glove are thrown above the SML axis. Both are undervalued. It is predicted that these firms will go higher. As a result, investors are recommended to purchase these shares because buying an undervalued stock means reducing the chance of losing money, even if the company does not do well.
Thank you, ATHIRAH. Then I will proceed with company's industry value. As you can see in the table, the current market ratio value is 7.77, price earning ratio is 15.51, expected EPS is 0.59. The current price of Supermax Corperation Berhad is 7.77. This means that the company's stock are overvalued as the industry value is only 3.5999. Thus, the investor should buy the share because the value of stock is lower than the underlying and is expected to increase in the future compared to the actual value. It is ideal for buying potential investor and current investor. As a result, networking with Supermax Corperation Berhad shows that the organization can cover its existing obligation with short-term funds available from the company's current assets. The business has shown its productivity in the use of all properties of the company's stock. However, are less good at producing profit using current stock than their rivals. In addition, Supermax Corperation Berhad demonstrated that leverage efficiency is strong with a low percent debt ratio. Also, the profitability ratio of Supermax Corperation Berhad is performing. This means that the capacity of the company to manage a good sales cost versus its sales revenue and to achieve high return is showing better prospect for growth. Meanwhile, for the owner of the venture, Supermax received a low return rate on equity investments. Finally, Supermax Corperation Berhad market ratio is in good condition. The estimated rate of return of Supermax is lesser than its required market return. As an investor, they should buy stock when the stock at lower price, not at overvalue. Supermax have risk but with lower return because of the undervalued price. This depends on the risk tolerance of the investor willing to invest in the company. It's proven that Supermax is able to provide less return to be compared to its competitor. A lower range of possible returns make the investment less risky. It can be concluded that Supermax provides fair performance of return in exchange of its low investment risk. Then we will proceed with technical analysis. The analysis of price movement primarily through the use of chart to order to forecast future price trend is a technical analysis. Forecasting future fluctuation in financial market on the basis of a study of past price movement. Moreover, it also aware of measuring securities by examining market activity data such as past prices and amounts. Furthermore, this approach assumes that there is a sort of trend in the past movement of a stock. The standard technical analysis metrics are the simple moving average, convergent average, relative strength index, rate of change, stochastics, and Williams %R. The forecast generally depend on the whether to purchase, sell, or keep the remainder of the indicator data. Next is KHATIMAH index. In 2018, this graph shows that the sideways trend occurs from the beginning of February until the end of April, based on the KHATIMAH index for the year 2018, ahead of the headline letter in the day by the US to violate tariff on Chinese import worth $54 billion. Firmatory commitment is disparating the reason why Bursa Malaysia are traded sideways. In third quarters of 2018, the index regained its strength by growing bullish from one quarter of the year. Earlier period of the fourth quarter, the trend goes very steeply. The small time frame of the trend proved that the strength of the index was good as moving toward the next year. It goes with a good momentum. Next is 2019. In 2019, this graph shows that the downtrend of index at the beginning of the first quarter of 2019. There is a bearish trend happening in the middle of February until the end of May based on the KHATIMAH index for the year 2019. The KHATIMAH index is closer to the lower in order to become conscious of the US-China trade agreement with the regional market. In the second quarter of 2019, the index regained its strength by growing bullish until earlier third quarter. Earlier period of the fourth quarter, the trend goes range sideways. Moreover, the second quarter, the trend continued on a bullish path where it hits all-time highest in value. After that, in the period of the next quarter, that is fourth quarter, the trend moves sideways. As for 2020, the chart indicates that the index will be bearish at the end of the first quarter of 2020. This is because the situation was worsened by the COVID-19 pandemic as its key trigger, and the drop in crude oil prices caused a major decrease. In the second quarter of 2020, the index regained its strength by growing bullish for second quarters of the year. Moreover, the fourth quarter, the trend continued on a bullish path toward the month of the earlier November until the end of December, where it hits its all-time highest in value. After that, in period of the other quarter, that is third quarter, the trend moved sideways. In the second quarter of 2020, from May until July, the trend again moved bullishly, but before the chart showed the bullish movement, at the first quarter, it showed the bearish.
So now we come to the next point, which is comparative analysis. According to 2018, Supermax has an inverse relationship with KLCI. In 2018, the company price dropped after the company unable to get Dato Seri Stanley Tai Kim Sim as the next director because he was sentenced to an insider trading offense. Besides, KLCI shows a bearish trend movement due to lack of fresh catalyst. This partly contributed to around 270 ringgit billion loss in value of Malaysia's broader stock market. In 2019, Supermax showed a bullish trend due to US-China trade war. These two countries have a high demand for gloves, which increases the revenue of Supermax Corperation. Further, the KLCI index fell more than 1% so far in 2019. The trend is unlikely to change as investors wait for Malaysian government initiative to cut the budget deficit, clamp down corruption, and boost purchasing power. Subsequently, Supermax has an unusual price due to the pandemic COVID-19, with the demand for rubber gloves increased extremely in 2020. Moreover, Bursa Malaysia recorded its strongest performance over 2 months, with trading volume surging and investors piling into banks and leisure stocks while reducing their stakes in glove makers on the positive development of COVID-19 vaccine. Subsequently, the secondary trend for 2019 caused by the improved sales revenue was due to the new replacement lines commissioning within the group. As a glove maker, the secondary trend in 2020, Supermax, ignited by the COVID-19 pandemic, is seen as beneficiary of higher glove demand. Furthermore, there is a minor trend in 2019 and a minor trend in 2020. Due to exponential earnings growth, the share price had fallen. According to the KLCI, from 2018 until 2019, the primary trend shows a bearish market. Therefore, Bursa Malaysia ends volatile in 2018, battered by US-China trade tensions. Otherwise, in 2020, the primary trend showed up in the bullish market. Further, KLCI has increased due to investors' confidence that the global economy is beginning to reopen and the COVID-19 is under control. After that, the secondary trend for 2019, which KLCI is rising 0.83% on sustained momentum. Instead, the secondary trend in 2020 is a downtrend despite a brighter economic outlook, the FPM KLCI dropping to a 2-month low. Furthermore, the minor trend in 2019 with the KLCI fell at the month's lowest level. Conversely, the minor trend in 2020 Bursa Malaysia's main index rose by 3.55 points and was already up by more than 140 points in November. Furthermore, support and resistance represent vital points where supply and demand force meet. For the Supermax resistance line, the price advance against resistance are seen. It is assumed that by the time the price hits the level of resistance, supply would exceed the demand and prevent the price from increasing above resistance. Next, the support line suggests a bearish line, which is believed that demand can surpass supply and prevent the market from dropping below support by the time the price hits the support line. Then for the KLCI, support line suggests a bullish line that is synonymous with production. Support is the price level at which the market is considered high enough to prevent the price from decreasing. Besides, the resistance lines illustrate the price progress against resistance. To sum up, Supermax has an inverse relationship with KLCI. In trend analysis, we have seen the market move for Supermax from downward to upward. Besides, in the first place in 2020, the trend is a reversal. Since the trend is bearish, it is recommended for investors to sell the stocks.
So let's move into the next subtopic, which is indicator. So basically, our group use these 5 types of indicator for trader to analyzing historical data to predict the future price movement of Supermax Corperation Berhad. There are 5 types of indicator, which is SMA, second is MUHAIYEDDIN, RSI, ROC, and lastly is stochastic. Next, let's jump into the chart of Supermax for the past 3 years. SMA. Referring to the slide beside me, based on SMA in 2018 at the middle of November 2018, creating a bullish crossover and regarded as a golden cross. However, for 2019, it indicates the buy signal in the middle May and early August. And for the current year 2020, at the end of September, it exists buy signal in the middle of November. The shorter average crossed below longer average. It also indicates as a sell signal likely due to the oil price and COVID-19, which caused many investors became panic and sell their stock to avoid losing more. MACD. For historical data referring to early 2018, there is no movement of the MACD line, which is the MACD lines not at the oversold line or overbought line. For the current year, we all know that in 2020, the pandemic COVID-19 gave the public an impact, especially to the investor. However, at the beginning of the July, the MACD line reading is a buy signal because Supermax pushed their graph makers share price to the higher price that beat RHB bank price. RSI historical as the beginning of 2018, it exists a buy signal since the RSI reading falls below 30. However, the RSI line moves steadily in between the overbought line and oversold line until the end of the year 2018. And for the current year, on April, indicates a sell signal since the RSI is reading above the overbought signal above the 70. Therefore, the current price shows there is buy signal at the end of December. Okay, let's move into the stochastic historical data for stochastic in May 2018. It indicates a buy signal. Then the stochastic oscillator began to increase by the mid of April 2018 until the middle of July. Meanwhile, at the beginning of 2019, it an oversold condition in which the stochastic oscillator reading is below 20 levels. The movement of the stochastic oscillator is volatile until the end of the year. For the current year, it occurs at the end of February, middle of April, early July, and early October for a sell signal. ROC. For historical data ROC, as the price is already overbought, it is suggested that existing investors to buy the stock as of in the middle June. In February and May in 2019 also showed that the sell signal is because the economy well and investors start to selling stock as it will cause loss due to the economy not growing well. For the current year, as for the year 2020, at the end of September, in the end of May and in middle of July, it indicates sell signal. And finally, we jump into the conclusion and recommendation. As for 31st December 2020, Supermax price is RM6 ringgit and 1 cent. Based on the technical analysis that we have done, we can see that Supermax is not convincing because the company tends to have many volatility and fluctuates drastically many times. Based on the indicator, we believe that the company will have price reversals soon. However, for the latest price only start to move in a decreasing movement. The price have a break through the resistance line, so the company will probably have continuous decline again before reverse to the uptrend. And last, due to ongoing COVID-19, the stock will probably fluctuate more. The investor need to be more careful to invest with current pandemic. Supermax expected return rate is lower than its required rate of return, and it is referred to as an undervalued stock. The investor can purchase the stock when the stock is not overvalued at a lower price. When the price inevitability declines, purchasing stocks that are overvalued could lead to the losses. Besides, it is recommended to the current investor to sell the stock before reaching the maximum fall. Also, potential buyers have to keep the stock and wait for the stock to reverse and enter into the market.